Everyone, and welcome back to FX Mind Reading. I'm excited to dive deep into gold analysis today, using our trusted 15-minute and 1-minute charts to uncover potential trading opportunities. Before we jump into the charts and discuss the future price trends, if you're new here and looking for insightful Forex analysis and actionable trading signals, make sure you hit that subscribe button and ring the notification bell so you don't miss out on any of our future videos. Alright, let's get started with today's gold breakdown. This support zone is identified between the prices of 1.15202 and 1.15252, spanning from timestamp 176.191.3800 to 176.192.2800. This area shows a notable period of consolidation and multiple price interactions, suggesting significant buying interest. The accumulation of candles within this range, some with longer lower wicks, indicates that sellers attempted to push prices lower but were consistently met with strong buying pressure, leading to price reversals. The density of price action within this relatively narrow band signifies a battle between buyers and sellers where buyers ultimately prevailed in holding this level, creating a psychological floor for the price. The presence of multiple candlesticks with their lows residing within or very close to this range, and the subsequent bounces observed, strongly indicate its significance as a support. The extended period of trading activity, with a noticeable increase in tick volume in some instances within this zone, further solidifies its importance as a stable demand area, where previous price action has shown a clear tendency to halt downward movements and initiate upward trends. This resistance zone is established between the prices of 1.15767 and 1.1586, observed between timestamp 176.183.1900 and 176.183.3700. Within this price range, we can observe several significant price candles, including those with substantial upper wicks and rapid declines from their highs, indicating strong selling pressure encountered at these levels. The consistent failure of prices to break decisively above this zone, and the subsequent pullbacks, point to the presence of a significant number of sellers actively defending this area. The consolidation and indecision seen across multiple candles within this band suggest that sellers are successfully absorbing buying momentum, preventing upward expansion. The history of price action shows repeated attempts to move higher being rejected, reinforcing its role as a barrier. The accumulation of trading activity and the inability of the price to sustain higher levels suggest that sellers are well positioned here, making it a key area where upward trends are likely to stall and potentially reverse. The volume characteristics within this zone also support its role as a significant supply area. The support zone is identified between the price levels of 1.15302 and 1.15318. This area shows significant price action characterized by multiple touches and a period of consolidation. Specifically, around the timestamps 176.194.2840 and 176.194.3380, the price repeatedly tested the lower bound of this zone, indicating buying pressure at these levels. The data between 1.15313, open at 176.194.2840, and 1.15302, close at 176.194.3380, shows a general downward trend but is met with resistance to further declines, forming a clear floor. The high within this period is 1.15316, and the low is 1.15302, confirming the bounds of this significant support. The consolidation and repeated testing suggest that this price range acted as a strong buy zone, absorbing selling pressure and preventing further significant price drops. The presence of multiple candles with lower shadows within this range further reinforces its role as a support level. The volume also shows significant activity during these periods, indicating interest from market participants at these prices. This zone clearly demonstrates the characteristics of a well-established support level through its price action. The resistance zone is identified between the price levels of 1.15353 and 1.15372. This area exhibits clear signs of selling pressure, where the price struggled to move higher. Notably, around the timestamps 176.194.3800 and 176.194.4100, we observe the price reaching highs and then reversing, creating significant upper shadows on the candles. The high price recorded in this range is 1.15374, and the low is 1.15352, defining the boundaries of this resistance. The repeated attempts to break above 1.15372 were met with strong selling, pushing the price back down. This pattern suggests that sellers were more aggressive at these higher price points, effectively capping any upward momentum. The consolidation and failure to sustain new highs indicate that this price range served as a strong barrier to further price appreciation. The high volume observed during these resistance tests further confirms the presence of significant selling activity, reinforcing the resistance. The formation of bearish candles with long upper wicks within this timeframe is a classic indication of resistance. The price action clearly shows that this zone acted as a ceiling. The market has been navigating within a well-defined consolidation zone between the support at 1.15302 and resistance at 1.15372. The recent price action indicates a potential upward movement, with the price currently hovering near the upper boundary of this range. The Fibonacci retracement levels suggest that the price is attempting to break through the 0.618 level, which could signal a continuation of an upward trend. The Bollinger Bands are currently narrow, suggesting low volatility, but there's a slight upward bias in the middle band, indicating potential bullish momentum. The tick volume has been moderate, with no significant spikes to suggest a major breakout or breakdown. However, the recent candle closes are above the middle Bollinger Band, and the price has tested the upper band multiple times. If the price breaks decisively above 1.15372, it could target higher resistance levels around 1.15400, fueled by the existing bullish sentiment. Conversely, a failure to break through this resistance could lead to a pullback towards the 1.15302 support level, retesting the lower end of the consolidation. The upcoming price action will likely be influenced by the market's reaction to the 1.15372 resistance, with a breakout leading to further upward exploration and a rejection leading to a potential decline back into the consolidation range. Traders will be watching for confirmation of a sustained move above the resistance.